Hey, what's going on, everybody? I have had a couple people to reach out to me um, already because you guys are really liking this 15-minute chart um, doji or decision candle, what I have been pretty much trading. Remember, I always trade off the higher time frames. You should too. So I figure I'll make this real quick video. So today I'm going to talk about the 15-minute decision candle, okay? Because that 15-minute decision candle is not always going to be a doji. A perfect textbook doji is going to look different at times. So basically what I am trading decision zones. It's the decision zones where price left. It's the decision zones. So my goal isn't to find the perfect doji. My goal is to find where the auction made a decision. So here's my process. First and foremost, when you're trading auction market theory, price will go from balance to imbalance, then back to balance again. You guys have heard me say this um, several times. So what I do, I find a balanced market. So step one, find a balanced market. You may say, well, what is a balanced market? A balanced market is when price moves sideways. You can have this small sideways movement here, or you can have this big sideways movement here. So price on the left will let you know what price on the right is going to do. So you can have this whole sideways market right here looking for a decision candle. So price will go from balance, it will go imbalance, back to balance, go imbalance again, back to balance, then imbalance. So price goes from balance to imbalance to back again to balance again. So price is always looking for an auction. Are we going to accept higher prices or lower prices? So when price is moving sideways, this is what you call fair value. So this is fair value when price is moving sideways. Because price is moving sideways, buyers and sellers are agreeing. So once buyers and sellers stop agreeing and higher prices are being accepted, it's going to go find the next balanced market where business was being done at. So case in point here again, I'm just going to go find some of these zones here. So balance here, it went imbalance here to this sideways market here, the balance. Okay, so same thing here. You can just look at it. Just make if you zoom out and don't zoom in too close, you'll be able to see it. You see here, we have a sideways market here. And this is on the 15-minute time frame. You can do this on the 15-minute time frame, the 1 hour time frame, the 4 hour time frame, and the daily time frame. Okay? So price was in fair value. This was sideways here. So price was balanced. It went imbalance and it created a balanced market. So if there is not a balanced market to my left over here, it creates one. So we're going to scroll to the left and we're going to see if we had a balanced market. And if you look here, where price moves just sideways, it just moves sideways right here. And so when you mark your zones, you want to mark them, okay? And when you mark your sideways um, market or your balanced zones, you always want to use the fixed range volume profile, which is this tool here. You can find it over here. So you grab your fixed range from over here, you start, and you mark a sideways price action. Okay, kind of getting ahead of myself here. So you want to mark it. You have it. Okay. You want to mark your sideways price action. Okay. You want to mark it here. You want to mark them. That's your sideways price action right there. So balance, when imbalanced, you got a balanced market here. And this is how you get your levels. This is how you get your levels that you trade on. Okay. So balance went to imbalance to this balanced market because this is where fair pricing was done at. So price, we accepted higher prices. We begin to accept higher prices. So I always want to identify my key levels using the sideways price action on a higher time frame using auction market theory. So in auction market theory, as you guys heard me talk about before, it can be a buyer's defense, seller's defense, the value area high, the value area low, and the point of control, or the overnight high, or overnight low, which, those are again important levels when you're trading auction market theory. Okay. So you're just asking yourself, are we accepting higher prices or rejecting lower prices? All right. So once price reach a location, once it reaches my location, I then look for, or I'm asking myself a question, where did the market make the decision? So in this balanced market right here, price made a decision. Price action made a decision to go where? Lower. It went imbalance. So I'm asking myself, if price come back up to this area, what decision zone? Where was the zone? That zone was right in here. So on my 15-minute time frame, I'm going to look for the candle that made the decision. And if you look right here, this candle right here, I would call that a shooting star. Okay, that's that. This candle resemble a shooting star. But if you scroll to the left here, if you're looking right here, price came and swept this liquidity first, okay, before it went down. Not only that, if you look right here, you see this point here before price moved down. Look at this sideways market right there, and you see how price rejected it. Okay, it came to the point of control. Now the point of control is always going to be a magnet, so it came in this zone here. And if you look, we had a small doji here. We had a closure beneath it right here. And so we always wait on a retest. So this candle here was a decision candle for price to go lower. So you wait on price to come back to the decision candle. Again, it's not always going to be a doji. It's not. What you see show up a whole lot more are dojis, okay? A lot of times the decision candle or the decision zone is not going to be a perfect doji. This was the decision candle here, so I am going to wait. So if I'm going to wait here, right? So once price reach the location, which here I'm going to look and see what happens when price come back up to this area. All right, when price come up here. So this is where you make your decision. Are we going to accept higher prices or lower prices are going to be accepted? So I wait and I wait. And so, and what I do, I watch and see if we close above the decision candle and see if we begin to make higher highs or higher lows. or I wait for the retest to look for a buy. If we close below the decision candle, when we get to that zone, okay, if we close below it, that decision zone, and begin to make higher highs, higher lows, or I wait for the retest to take a buy. If we close below the decision candle and begin to make lower lows and lower highs, I wait for the retest for the sale. Okay. So then I would drop down to the 5 minute chart. And when I drop down to the 5 minute chart, because I enter on the 5 minute, the 2 minute, or the 1 minute. So market structure will confirm the direction before I execute it. And that's it. And that's my entire process. What I do, what I look for every single day. Now, if you look at all three markets, if you look at some other markets, and I'll go over a couple examples here a little bit. If you, all of these markets do the same thing. I'm just going to zip through them real quick here in a minute, just to show you if you study auction market theory, if you study how the price moves, you can catch some pretty good trades. Now price, now this we in a live market right now. So look, we in a live market right here. I'm just want to pause. I just want to pause real quick because I just glanced at this real quick. Look at this real quick. Look at this right here. Look at this right here. This is case in point right here because this is price action right now. The auction is in play right now. So if you look right here on the 15-minute time frame, right? Let me move this up a little bit. Let's see. This is Monday. Monday's price action, right? If I take the sideways movement, I say from here to about there. This is my 15-minute profile, right? So for the ones who has been around for a while, you always say when price come down to the value area low, you look for potential buys. So if we look right here, I'm just gonna put a mark there, right? So this is that value area low. This is where you being patient. Price was coming down to it. So I'm gonna keep it on a 5 minute time frame to see what it's doing. So I see here, I see we had a doji here. I see we had an engulfing candle. We had an engulfing candle. We had a close above the doji. So we can always wait on a pullback. Well, this is the decision candle. This is a decision candle. Okay. So right here on the 15-minute time frame, this is my key level. This value area low right here. And what do you see at this value area low? A decision candle where price went up. You see another one right here. Okay. So on the 15-minute time frame, you can mark it and you can wait for the retest. And like I told you guys before, when I am entering in on a doji on a 15-minute, if I'm looking at the 15-minute time frame and I'm trading that decision candle off the 15-minute time frame, my entry is always going to be 25% here or 50% here. Okay. So here, right here, this white line is where you could have, and I probably can just end the video right here because this is happening right, like literally, like right now. So if you look here, um, if you look here, we have a long. If you wanted to go long here, because this was my would have been my entry, right? And for the ones who follow me, so for me, I'll do a 30 points. Where's she at? Uh, so TP1 or first base would have been here. So you could have got into the trade here. There's your 30 points there. TP2, you got 60 points there, or three second base. Here's third base here, and here's a home run here. Uh, do I not have it? I don't think I have it, but it's okay. So, and you can hold it here, and if you look right here on the 15-minute time frame, what do you see? You see sideways price action, and this sideways price action right here, you can draw just a small fixed range there, and boom, price has come up here to this value area high. And look what you have right here. You have a decision candle. This decision candle, it's not a perfect doji. It's a decision candle where price left from. And do you see right here how we're getting small rejections are right here? Again, price left here. What do we have? A decision candle. When price left, when the auction, when lower prices was have began to be accepted. So if I was to box this out, this decision candle here, look where price came. And if you wanted to take a quick scalp, you could have took a quick scalp on this. So I really could end the video right here, and it looked like we got 3 minutes at the top of this trend. We may print a shooting star. You don't know. I don't predict the market. I don't know. I just read price action. Okay. So if you look at the other indices, you would notice that you would see balance to imbalance, then back to balance again. You would constantly see it. Okay. And you always got to remember this. Remember this, auction market theory tells you where. Market structure tells you who is in control. Price action tell me when to execute. So that's when I drop to the lower time frames. So this right here was a perfect example how a trade could have played out for you. If you have to trust the process. You could have just took it to the point of control of this sideways price action, 187 points. Okay, 187 points. So I trade off the 15-minute, I enter on the 5 minute, the 2 minute, or the 1 minute. Okay. Okay. So now let's look at some other indices real quick. So if you go here, let me go here. Let's just look at YM here. Let me put YM right there. So if we look at YM, it's going to be the same exact thing. Okay. I want to zoom out. And this is a repeatable process every single day. 100% repeatable process every single day. So you have here, look, let's say for instance here, this can be your A plus trade that you will possibly wait on. You have a balanced market here, right? You have a balanced market there. Go to market, this price moves sideways. You have a balanced market here. Let's say price was here, right? And you want to, and once you see we are leaving a balanced market to go imbalance, it's going to go to the next balanced market. And if you look here, you just look for where price moves sideways, okay? Price moves sideways from there to there, right? And so here, you could have grabbed that, or you could have grabbed this whole entire sideways movement right here. You could have grabbed all this right here, just that. And if you look here, price came down to the value area low. And what you're going to do on the 15-minute time frame, you're going to look for that decision candle where price left. You had a movement here. So this movement right here started this entire uptrend. So if you go here, you mark it. And remember, I always wait to enter in the center. Okay. And if you wait and if you be patient, or if you have it marked out on your chart, look at what happened. The first touch right here. So you could have gotten in your trade and just took you your little base hit. Okay. Sorry. Let me go here so I can make more so you can see it here. Where is she at? And this is it. And this is the only thing you have to do every day, right here. Right there. And this is the 5-minute time frame. Okay. Let me go up here. So right here, once price came here, you want to start looking. Okay. So if you look here, let me go ahead on and delete this so you can see this a little bit better. So right here, price came down right here on the 15-minute. It printed you a doji right here, current. Okay, this was your zone you was waiting on. Price came down to your zone, so now you want to wait on the your entry or your reversal pattern, or if you want to just trust the process, you could have just got into the buy, but you still want to wait on um, your entry criteria. So it's just this here. You could have entered here, and you could have got you a base hit. So if you're here, right here, if price, this candle, let's say price came down, and you're waiting. You had this here, so you could have entered into your trade off of this candle here, and it would have moved your 60 points, a base hit. Okay, could have exited your trade, and again, if you look here, let me see. You see here, this is open. If you look right here on the 5-minute, balanced market, price came up and it rejected it. Okay, it's the same thing. You just find your balanced market. So you'll find your balanced market to the left. You will see if price is imbalance or balance, and you just wait to see which direction that price is going to go. So this is just a YM example. All right. Let's look at a gold. Same thing. Let me put gold here. Same thing. You go balance to imbalance, to balance to imbalance. Let's just look at this gold trade real quick. If you had gold marked on your 15-minute time frame as an area where you want to watch, you could have that sideways movement there. Just look, man. You have this sideways movement here. Let's go over here. All right. So here We have this balance market here that you, let's say, previously marked out, right? So price was coming down here. Auction market theory tells you where. Market structure tells you who's in control. Price action tells you when to execute. So right here at these key levels, if you look at the key level on the 15-minute time chart, you want to find the candle that made a big move. So this candle right here is the candle that caused this entire move. It's not a doji, it's a decision candle. A lot of times, again, like I stated, you'll find a doji. But if you look here, this candle right here was the decision candle. So you wait to price come down to this area. When it comes in this area, okay, you can look right here. If you just look at this one single move right here, right there, this one candle on a 15-minute time frame caused this ginormous move. So buyers were present here, okay? They started to move, so it broke, it came down for the retest, and it shot up, okay? So then here is where you will find your continuation pattern or a reversal. Again, the rule to auction market theory is, let me move this out of the way. If price come down to your value area low, you are looking for a what? Potential buy. So you will look for a reversal pattern. So right here, if your bias is to take a buy, so then that's when, and you got to understand also, time is fractal. Okay, so this is the 1 minute. Let me go to the 5 minute. So right here, let's say here is where you was waiting on price to come. Right there, right? Again, like I stated before, if you really trust the process and you believe in your process, you can just go ahead. You can get into um, your buy, sell, or whatever you want to call it. So here is a zone where you would want to be looking for the reversal. Okay, right in here, this is where you would be looking for the reversal on the 5 minute. Okay, so you would see price came down to your zone right in here. What do you have? You had a decision candle. This one candle was the decision where buyers, okay, started technically way down here. They pushed price up. What did you have? A close above this candle. What did you have? A engulfing candle. So what do you wait for? The retest. Okay? So here, let's look at this one real quick on the 15-minute time frame. What did I share with you guys? On the 15-minute time frame, where do I wait for price to come in to pick me up? I cannot make this stuff up. Auction market theory tells you where, market structure tells you who's in control, price action tells you when. So, auction market theory told me this is a key level, okay? Market structure told me, okay? The market structure told me who's in control. Sellers was in control here. Market structure told me the buyers stepped in here. And so again, what did I tell you guys where I like to enter in if I'm on my 15-minute, if I find a 15-minute decision candle in the middle. Okay, so price came down, boom, it closed above it, came down to retest, and look, let me zoom in on this so you can really see. So you can really see this. No drawdown. So price would have came and picked you up and boom, and moved in your direction. I hope I said something. I hope I didn't bore you guys. Again, remember that this is not financial advice at all. This is not financial advice. This is just a process that I take, how I take my trades. Okay. So again, this is the live market. If you had your game plan already, you could have been in this gold. You could have been in this gold buy, waiting, or just riding with some runners. And here, I made a comment earlier that the auction is a decision area. It shows you where. So here is where sellers defended this zone. And what was the candle? Here. So I hope I said something to help you guys out. Until next time, I will see you guys on the next video.